I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. So the stock market continued its march to the upside this week on a holiday-shortened week and things seemingly much slower. Stocks got a lift despite the fact that there were some overnight dips in China on weakness over there in their credit markets, a lot of fear about Chinese credit markets, but stronger data out of the Eurozone helped stocks, and they then moved upward after some of these dips that we saw in the overnight trading. There's continued doubts about the U.S. tax plan, but it brought no real concern to investors. Fears do grow that that plan is going to bust the U.S. budget. Questions about the Obamacare mandate and whether or not that's going to be included, and whether or not the SALT taxes are going to be included, those deductions or not. So lots of questions still out there, and big differences between the Senate and the House plan, but didn't seem to bother the markets at all this week. We're going to take a look at our 60-minute chart of the S&P 500. When you look at this, the gray areas are the overnight areas of trading, and the white areas are the day trading. And of course, Thursday was a day that the U.S. markets were closed, but we still had trading in the European markets and the futures, so that's why, well, it looks like there's trading on that day. Monday saw the markets overnight move down as Merkel has trouble there, as she can't form a government, and we had this big dip. But then Eurozone stocks reversed to the upside, and that helped our stock market get a lift here on Monday. Tuesday, Goldman Sachs came out bullish on Europe. That gave the European stocks a lift that pushed our markets up also, and you can see we had a strong day there on Tuesday. Monday and Tuesday, the big gains for the week, and then the market really quieted down. On Wednesday, Asian stocks were stronger, and then we're waiting for the FOMC minutes. You can see that, and as I say, doves alive. They say the December rate hike is likely, but they're still concerned about inflation, and they're worried about the stock market. If markets reversed, it could hurt the economy. Well, Janet Yellen and Bernanke before you, all you did this. You created this situation where you have to be afraid of the stock market having a pullback. So I don't know. It's kind of self-fulfilling, isn't it? You got to think about that. That's our Fed leaders for you. On Thursday, we had a crack. China down 2.2% on those bond fears as yields pop, but then Eurozone PMI came out strong, and we got that rebound. Nothing much, of course, on Thursday as we were closed here in the U.S. for the holiday. Friday, you can see U.S. PMIs came out. They were softer. There's really a strong doubt whether we can get 3% growth based on those numbers that we're seeing. And here, with just less than 1 hour to go in the trading session, you can see we are just edging to the upside here in the stock market. So that is a look at what we saw in the markets for this holiday shortened week. For the stock market for the week, with just a little bit left to go, Dow Jones Industrial Average, S&P 500 up about 1%. That's a solid gain. The Nasdaq about 1 1/3% to the upside. The Russell, which is flattened out here on Thursday and Friday, big gainer for the week, about 1.5%. The bond market, not much movement in there. The 30-year was pretty sluggish, up about a quarter point. The 10-year about unchanged or down a couple ticks on the week. The dollar moves sharply to the downside. Now that has a short-term breakdown in it, and that is, in my opinion, significant. That we're getting that breakdown. Of course, the Fed is dovish and they're scared of their own shadow, so that's making a difference. The euro currency gets along a lot stronger in its inverse correlation to the dollar, and the situation is that, well, we have potential flat, 2.5%, 2.2% growth here in the U.S. is what it looks like. And now we have the inflation looking like it's picking up, stronger numbers coming in Europe, potentially in Japan, them changing their policies potentially in the coming year, while the U.S. is, well, likely to slow down their increases in interest rates. That hurts the dollar. That's a bad scenario for the dollar. I'm going to talk a little bit more about that in a second. Gold, silver, really sluggish relative to this dollar move. Gold down about $7, silver down about 30 cents. That was after huge Fridays that they had to the upside last week, and then reversals, pretty good sized reversals to the downside on Monday. After Monday, there wasn't a lot of movement there in the precious metals markets, though we think that there's something better not far out there for those markets. Oil gains about 50 cents on hopes that OPEC is going to continue their cuts. And we think there's a little dip coming in the oil market. We'll also show you more about that. So we're coming into December here, and many analysts think, as usual, that seasonality is good for the stock market as we get into the final month of the year. While there is favorable seasonality during that period, it's not always the case. As a matter of fact, the last 25 years, approximation, we've had 14 up Decembers, 10 down Decembers, and one around unchanged. So while it slightly favors the upside, you still can have some downside moves in December, and there have been some sharp downside moves in the month of December. I'm going to go with a weak December coming in here because I believe the intermediate patterns that we look at are calling for corrections, and the bulls do need a shakeout in here. And with the dollar now breaking down and getting sold very hard, it's a perfect scenario for international investors to be getting really worried about holding dollar assets. So that could be another reason why the stock market can go into a correction right now and potentially have one of the weaker Decembers I think that we've had. And that would be, well, a big surprise. Like I say, the bulls do need a shakeout. All right, let's move to our best and worst stocks for the week. All right, for the best stocks of the week, one of the big movers is a stock that's been a big mover. It's very interesting how momentum plays a giant factor in the movement of stocks nowadays, and we've seen one of the biggest momentum years that we've ever seen. You've got to go back to, well, maybe the 1990s, maybe 1995, to see anything where momentum played out as strongly as it has this year. And that's why I've been pushing, looking at our momentum indicators, which, well, have been pretty fabulous. Take a look here at the biggest upside mover of the week, which is Marvell, MRVL, in the semiconductor category. Look at the size of the move it's had in here. The reason for the upside move of 16% is they're buying their rival Cavian and the investors have really loved that. So, and there's been buyout rumors of somebody going after Marvell too. So you could see that big upside gap. Notice our cycle analysis in here, where the beautiful, what we call rhythmic motions in the market that show up in cycle patterns are showing up really in here. For people that are new to our analysis, what we look at are these cyclical rhythms of the market, and what we look at, different size and different time frames of cycles. So there's a cycle there which bottoms here, made up of two different pieces right in here that you can see, and you can see those two pieces right here, right, and the two pieces right here. So we're in this second rally in that minor cycle and getting up into this pretty good resistance zone. That intermediate 423 is often a very, very big resistance area, and it takes a massively strong stock for it to get up there, and you can see Marvell has been that. We're actually looking for it to top in this area in here between this 24 and 25 number. It's had a massive move for the year, some 80%, and we're looking for just a modest pullback in what is a very strong stock. Take a look at Square. I mean, this has been just incredible. Look at that upside move. So talk about big moves for the year. Analysts upgrade this one. The PE is at about 110. It's up 225% for the year. Talk about momentum. This is the daily chart, and this has our askSlim ribbon on here, which you can get on your TOS platform just by going to our resource page. See that green arrow? That's where it turned up. And since it turned up at that point at around 26 bucks, it's moved all the way up to $48. Now, it's getting overbought in here. You could tell by the distance it's moved away from the slim ribbon. So, there's that potential for a correction in there. But that's a great look at how the slim ribbon really signals momentum. Just a great indicator. And you can see that Square moving up, well, just fantastically. We're looking for a little bit of a dip in here and then firming up again. Trip has been a horrible stock, TripAdvisor, and you can see it's been in this downward stair-step pattern. We were looking for a low to come in a couple weeks, and it's starting to look like that low is shaped up right in there. You could see that buying starting to come in, but you can notice 1, 2, and 3 cycles negatively configured. That means they closed lower than they started. Beautiful cyclic rhythm in there, and we're in a bouncing area, and that looks like buyers are starting to come in, up 12% on the week. No news on that one, but maybe it's just bottom pickers toward the end of the year. Remember, depressed stocks do better as you get into the final couple of weeks of the year, the beginning of the next year. So no news. You could see the bottom forming in there. Valet is a materials stock. Now, we're looking at our material stocks as potential good movers coming into the beginning of the year. So you can get an idea of what we're looking at in here. This dashed line is the DBB. That is the base metals ETF. It's weighted equally between zinc, copper, and aluminum. And it often signals important areas for the material stock. So again, you could see what we call a harmonic family right in here and right across here. The low due right in this area. And you could see the buyers are anxious because it came about 2 or 3 weeks early and turning up. This is a bullishly configured pattern in here. What that means is that you see it closed way above where it began and then started to move up. The odds of getting above that cycle peak and beyond are very high. I would make it better than 80% based on the shape of this pattern. Valet looking good. Cliff up 10% on the week. That's building a base. U.S. Steel up about 8% on the week, and that's extending a positive pattern. So the material stocks are starting to look a lot better, and that's going to align with what I think is going to be better in the gold stocks also. Twitter, TWTR. This is a stock that we really called out and said it was going to do really well. We thought that the sentiment around it was changing. Look at this, all the way up to the 100% extension. Just gets up there really strongly. 10% gain on the week, the highest price in 13 months. And a very bullish configuration that we see going on in here. Yeah, we could get a pullback to about maybe 21 in here in the next few weeks. I think if it does that, I think it would be an absolute buy. 10% gain on the week in there. And Deere, last one we're going to look at in the best of the week, is there's not all that much on this slow holiday week. Deere explodes to the upside. Earnings beat. Our option bias indicator, which our level 4 members get, show that as extreme overbought, and we're looking for this to get at least some kind of a pullback in here. You can see in here, look at these last 4 cycles as it continues to churn its way strongly to the upside. Now we get overbought in here, so we're looking for a topping in deer and should get some kind of a pullback in there. Again, look at this slim ribbon in here. It turns positive over here with the stock at about 123, and then it moves all the way up here to about 148. So just a great look at these momentum indicators, and now our indicators are showing it as overbought. So in deer, we're going to be looking for a pullback. If you want to know what those colors are in there, those are our colored phases, and we put that in so our subscribers get a good feel for the rising and corrective phases in there, the yellow being the corrective phases. So that is a look at the best stocks of the week with not a lot in there, and I'm going to show you even less when you look at the worst of the week. All right, for the worst of the week, we're going to start out by looking at a couple of retail stocks. Sears has been trying to make a bottom, and I made a comment recently that it was time for at least a bottom there. Now, if Sears isn't going to go bankrupt in the next month or two, then we're at a point where the stock should bounce, and it started to try to bounce as last week came, and then it eased back again. The stock under $4. I'm not looking for much more than just a dead cat bounce in this stock, but it down 15% on the week, and the big loser for the week, I think it's at an area where it's possible you could get a bounce. Now, what would be a reasonable bounce? The reasonable bounce would be to the 23 or 38% of this downside move. So I thought I would just put that in for you so you could see what that looks like. So here's the intermediate cyclic peak. Here's the intermediate cyclic low right over here. So if you wanted to project up to the levels where it would move, the 38% is right over here at $6.30. Or the 28%, let me just clean that up a little bit, is right over here at about 527. So I think 527 is the reasonable spot for this to move up to as a bounce. So it's trading at 382. Yeah, that's about a 40% plus bounce in there in the end of the year. This is for speculators only, people that are short-term holders and want to play a bounce. This is the spot it's supposed to make a bottom, and you can see our upward projection down 15% on the week, and we're going to look for the year-end bounce in there. Dillard's DDS, the next one we're going to look at. This is getting no Black Friday bounce whatsoever. The pattern in here is horrible. We're looking for another decline in here for the next month. It's down about 5% on the week, where we've had some other retailers do much better. Urban had a big week on the upside also. So this is really an ugly looking stock, and we're going to look for it decline through right around the end of the year in Dillard's, down 5% on the week. Applied Materials, AMAT. This one has been a monster. You can see that. Look at the cyclic patterns in here. So I'm going to show you the unbelievable 13-week moving average right over here, and the great bullish pattern. So you can see the cyclic lows that it points to right over here, and then each of those followed by up waves. And you can see the corrective period, the up wave, corrective up wave, corrective up wave, corrective up wave. Then when you get into the corrective periods, well, it's been reluctant to give any real ground. This one kind of a little longer correction in there, but not all that steep. So what's significant about this right now, let's just look at these last few, is that we have this giant shooting star right over here in Applied Materials. This to us is a top warning. And after it had a big earnings week last week, let's go to the daily chart. Look at this big reversal right over here. Take a look here. Just take a look from the point where the slim ribbon gave you the bullish signal right in here. And now you have this, what we call a dark cloud cover right in here and an engulfing right here. So this is where the slim ribbon turned positive, with the stock trading right at around 45 bucks. trades all the way up to 60, trades up that slim ribbon beautifully, and now gives us some signals in there. We think it's topping Applied Materials, and based on our weekly look that you can see right in here, let me just blow this up for you. You can see that, well, we're looking for a correction to come into about the first week of January. So this the stock looks like it's topping to us, and we think that if we had a long position in here, we would lighten up. The last stock on the downside that we're going to look at is Tesla, only down 3% or so on the week. But I got to tell you, this stock, this company, the execution has been really poor. And their Model 3 deliveries, I mean, just terrible. They did get their battery factory built on time from the time that they said, but they got a lot of work to do. And they come out with things like this truck and supercar. That truck, which is just looks gorgeous and amazing and has a 500-mile range. You got to put a 26,000-pound battery in there to get that. So that takes up a massive amount of the load capacity that the truck could carry. There's just so many things that are cash burners for this company. And you can see our downside projection in here. This to us is a sell zone right there. And I think that this stock is going to move lower. Take a look right over here on our daily chart. And you could see in here, as we look at these resistant zones and what they bring, we had this one marked as a sell zone. You can see what happened right there. This is the resistance zone right over here. And this is the sell zone right over here. Gets up and just tickles it and then turns straight south. So this is your downward move, 1, 2, and this one likely to move sharply to the downside again. Tesla looking really stinky, and I think that all of this hype on their Model 3 and all of this other stuff that they're showing, it's all going to get run down by the competition and the fact that they need massive billions of dollars just to keep this, well, kind of a facade going about the greatness of their cars. Yeah, their cars are beautiful and the technology is fantastic, but it needs government subsidies, and they go through money so fast it's unbelievable. So Tesla, I mean, they're going to need some kind of major turnaround to even have any hope of moving to any level of success, and I think they're very, very far from that. So careful, there could be some significant downside coming up in Tesla. So what's coming up now? Well, take a little peek at what I think is our excellent workshop, a couple minutes, and you'll get an idea of, as you get towards the end of the year here, you want to kind of reset, get an idea for what's maybe been an obstacle for your success as a trader or investor. Just take a little look at this quick explanation of our amazing workshop, the 5 essential building blocks of successful trading. Hi, I'm Steve Miller. I want to take just a few minutes to talk to you about our new video workshop, the 5 essential building blocks to successful trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos. which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success-failure cycle. You know, that cycle where, you're doing really well and all of a sudden you get into a slump. There's often forces within us that, bring poor decision making. I share mine, what those negative forces are and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. That stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on the plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about is discipline in life and in trading in this section, that really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. All right, I really want to encourage you to go to our top of our front page to the workshop link and sign up for that really great workshop. Perfect time as we come into the end of the year to take something like that for all levels of traders, all levels of experience. Also, if you want to see all of our other content, we're running a special half price 1 month. All you have to do is write slim at askSlim.com, ask me for that link, and I will send you the link to our level 2 videos or level 3 rankings and trade setups for you to have great information, of course, in there. So send me that email, I'll send you the link. Follow me on Twitter at askSlim, and at YouTube, also become a follower. And you like this video, give me a thumbs up, and I will appreciate that. Put your comments on that also. Okay, short-term view for the coming week, finally getting to that, and we're going to take a look at the 5 markets that we look at, accountability of what we said in the last week. We were about 60% accurate. We've been hanging around that level for the last few weeks. We missed the oil market. The oil market is stronger and moved above the range that we expected to happen, getting help from thoughts that OPEC is going to keep tight rein on production. And as far as the S&P 500 or the stock market, we thought it would rally through Tuesday or Wednesday and then turn down, and so we didn't really get that right. We only get a small little accuracy for getting the first few days of the week on the upside, as it did not move down from the levels that we expected. Bond market, we were really close. We thought it would be down a little bit on the week, fail from certain levels. It hit those levels, turned, and stopped, and the only difference is that the 30-year was up a couple ticks, the 10-year was down a couple ticks, so we get a little dinger on that, but basically about 60% on the week. Let's take a look now at what we see for the coming week. We'll start out in light crude, and this was the one we got wrong. What we expected was that it would rally up to about $57, where the resistance was, and then roll over. That's this pattern right in here. Well, the pattern still exists. We're still looking for that corrective period, but it got so much stronger. We're looking for 2 or 3 days to the downside in here, getting down to about between $57.60 and down to about $57. And then after that, probably getting stronger again. So that's a look at just what would be a blip to the downside and then turning up. And the fact that it's holding up so strongly gives you a longer-term perspective of how strong it is. In other words, you could see all of this rally, little period of minor decline potentially, and then up for a while. We could see $60 plus oil when we see this type of a pattern. So that's a look at light crude. We'll call it pullback into like midweek and then bouncing up again. Next thing we're going to look at is the dollar. Now, we talked earlier in the show about the dollar. Sorry about that. Let me just get this up for you. There you go. Sorry about that. So the dollar has had a breakdown in here. So this is the daily chart. Of course, we look at only daily charts when we're doing our short-term view. And we called this out to our members a few days ago that this breakdown was going on right over there. And that's, it puts pressure on all U.S. assets. We're not really seeing that yet, of course, in the stock market. But before you know it, I think we're going to see it. This is a really bad pattern. It points to a breakdown, maybe the first stop under 92, and then a rally, and then moving down again. So we're looking for bounces to fail, and this is a very negative pattern. You see our sell zone right over here. It's at 93.22 up to 93.43. If we get a little bounce here during the week, I think it's a screaming sale if it gets up to that level. So the dollar, to me, breaking down, really looking bad. Let's just look at the euro in here, which is inversely correlated, and you can see how strong this one is getting in here. I mean, monstrous upside move. And just as we said that if we thought that if the dollar gets a little bit of a bounce, it's a sell, we think if this gets a pullback, it's a buy. So that area right there looks like about 118.80 to about 118.20 is this buy zone in here. So if you get a pullback into that area, if the dollar bounces some, I think that that's going to be a really strong area to buy it. We're looking for this rally to get it up into the plus 121, 122 area, at least on the near term. So strong look here at the euro currency. Of course, just as strong as the dollar is weak, as that looks, well, pretty ugly. So the gold market last week, what we said was we thought it would hit up into the resistance area and pull back. The number that we were looking for was 1278 to 1297. It gets up to 1296 right over there and then pulls down. You can see it had a bad Monday. That was from 1295, so it's trading exactly as we expected. Look at this right in here. This is the minor buy zone. Now, there's a lot of lines in here that are really hard to see because we have so much analysis in here, the gold market and GDX market. So this is really the cycle that I want you to pay attention to right in here. I'm drawing it out. And you can see it has a couple of days dip in here potentially. If it gets into this zone right in here, that's the buy zone that we're looking for. It's about 1284 to 1279, just a little bit more dip in there, and I think that we're going to get into this rising phase right there. So for aggressive, more short-term traders, I think that is a buy zone in the gold market. Backs off from where we expected. Now it's getting down into the buy area, time-wise and price-wise, and I think it's a high probability buy coming up in here. Silver market, you could see that right in here, that we thought it would move up to around $17.55 to $17 to $17.55 in this zone right in here, and then turned down. It moved up to this level right here. I'm going to get a closer look for you, which was right at $17.38. So it moves right into that resistance zone we expected and then turns down. It actually got into the buy zone. What's different about this is that the silver pattern looks like it has about a week, or we'll call it 4 to 6 days and then turning up. The gold pattern looks like it's got about 2 or 3 days and then turning up. They're both basically the same. It's just that the counts are a little bit different. So they both look the same buyable in this zone right over here. It's 1697 to 1677 in the silver market. So all it needs is a little more dip and a few more days, and I think it gets ready to get a pretty good move there on the upside. So that's a look at silver. Just a little peek for you right in here at our weekly. I didn't mean to do that, but you can see we're looking for this in here to get into this rising period, which should take you up into the mid $17 area. So that's a little peek at our intermediate chart right there, so that you could see that where it aligns is that where this turns up on the daily chart, it also turns up on the weekly chart. Take a look here as we move into the bond market, /ZN. What we had said last week was that we thought it would move up into 125.07 to 15 and then fail. It actually got up right over here, 127.05, which was the bottom of that zone we were looking for, and then you can see it turned around and failed actually twice. The next week, what we're looking for is, well, we're going to call this a little more rally period, like right in here. You can see that, and then rolling over. That's kind of what we're looking for in the ZNs and ZBs. The ZBs are a little more bullish pattern. than the ZNs are. So we're just going to look for kind of up and then down. We're going to look for it to touch 2507 again, just above this level over here, and then roll over. Not an overwhelmingly bullish look that we have, though we think it has a little more upside room in there. When you look at the ZBs, you can see that it has got a little different pattern. It's actually heading more to the upside. We think it's going to get to the top of this zone up here as the stock market, we think, will turn weak, and it'll bring some more buyers in here. That's 155.07-ish is what we're looking for, and then turn over and fail. You could see our projection in here as it follows this trend, these cycles right in here. You could see that, and then potentially a lot weaker out over here. So that's how this shapes up right in here. You can see that 125.07-ish is the top of this resistance, and then roll over, probably get another rally after that, and then roll over again into this period over here. So bond market, we're just going to call it kind of moving to the upside, not being able to get very far. And that's a slight upgrade to what we had it as last week, just holding up a little bit longer, maybe a few ticks higher. So that is a look at the bond market. Last thing we're going to do is look at the stock market and the VIX, because I think that the VIX is signaling something right here. So last week we thought the market would be choppy up. We think thought it would last until midweek or so and then turn down in the S&P 500. Well, we were partially right. The part that was right was the easy, and that is the up part, because there's so many rallies in this market. It's incredible. And then it did not turn down whatsoever. So we only get a little piece of credit for getting that first few days of rally, but it did not turn down as expected. Now, what we're looking at in here now, I want you to see this pattern right in here, right there and right in here, how it made those two pieces made up this 19-day cycle right there. And here's how it shows up right in here. You can see that right how it showed up. Those are 9-10-day periods in there. So now where we are is 6 days off of this low. So that means 3 to 4 days on the downside right in here, and then rally. That's opposite of what we expected last week, but the downturn that we expected to come by Friday, which didn't come, of course affected by the holiday week, we think is coming early in the week. So we're going to look for a decline in here on the week. We're going to call it a down week. Touch this area of support at 125.87 to about 125.80. That's that minor support right in here, and then turn up again. And then after that, when we get past this, now here, this is what we're talking about, the corrective period, and then that next rally. This would be through about Wednesday and then move up right in here. Then after that, this is the period of risk really picking up as we have it drawn right in there. So we're going to look for the S&P 500 to get into that support zone, 25.87 to 25.80. NASDAQ, a similar pattern that we're looking at right in here. Same thing, we expected it to roll over by Wednesday or Friday. It did not do that. And now here's the minor support right in here. And we expect it to pull down and touch that support zone. That's about 63.20 to about 62.98. That would call for, something like a 100-point decline over here over this next several days. It looks like about down through Wednesday, and then be able to pick its head up again. So that would be a small down week that we're looking at right in there. So if we're looking for a decline and then up here, that means in the VIX we should be looking for a rally over these next several days. And there's an alignment in here that is beautiful when you look at the VIX. Let's just look at these 4 cycles right in here. And what way this lines up, and note for our subscribers that, well, you don't get this anyway, but we've talked about this, and that this has a little bit of a shift over right now, and you can see this perfect cycle. See the big cycle right in here, right in here, right in here. This is how the cycle's shaped up beautifully, right? Then this one and this dip. The dip is it came right in here, in this section right in here, the half cycle. Here's the half cycle, here's the half cycle. After each of those minor cycles, you got a blip up in the VIX, right in here, and that looks like it's coming right in here. You could see that shooting star or hammer bottom. We think the next several days, Monday, Tuesday, Wednesday, have a potential for a pop up in the VIX and then roll over again. Exactly inverse to what we just said in the stock market. And then right over here, right about the first or second week of December, turning up in the VIX again in a big way. So it's a little longer term look, but this looks to us like the VIX is going to have an up week early in the week, Monday, Tuesday, Wednesday. That's an alignment with the inverse of what we said in the S&P 500 right in here, where we think Monday, Tuesday, and Wednesday are down. So that sets up what we think is a high probability of getting the initial stages of a pullback starting here in the beginning of the coming week. That is our short-term view for the coming week. Hope that was all really interesting, that you got some value out of this entire show, and that you sign up to take our workshop or send me a email, slim@askSlim.com, to get our special half-price trial link. And I want you to have a great holiday week. Be careful because, it is so crazy out there. And we're always wishing you great trading.